All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Tuesday, March 7th, 2023. Welcome aboard. Let's go ahead and get started. Bottom right-hand corner of your screen, little black logo. Click on that, turn on notifications, subscribe to our channel. Make sure to hit the like button if you like these videos. I want to start a little different today because Powell is going to be speaking on the Hill. And I had this conversation with one of our staff members, our VP, Nick, yesterday, and I was kind of explaining how the things I see in the market. So I want to do a quick breakdown on Powell speaking today at the Capitol Hill, at the Senate actually. Then tomorrow he'll be speaking in front of the House Financial Services Committee. Today will be the Senate Banking Committee. And it's testimony, it's not under trial or anything, but again, you have to be under oath to speak to Congress, as you know. So, because it's just like a judicial thing. So with that being said, I just want to clarify a couple of things with the Fed. In my opinion, again, this is just my opinion, what I see the Fed is doing. I think the Fed, in my opinion, has switched into what's important and what's not important. And the reason I say that is, remember, inflation peaked in June, kind of very similar to gas prices. That's when CPI peaked. So I'm going to bring that chart up. Let's go ahead and see that here. Year over year, Fred. Should have got this ready. Let's see here, consumer price index year over year. Okay, here we are. Let's go ahead and bring this up to a 1-year period. And you can see how the CPI, again, I want to see if I can adjust the percentages here. Let's see if we can we'll do percent change from a year ago. How's that? There we go. Now we could see percentage change from a year. We see that the highest CPI rate was 8.93% in June 22. And if you ever taken math or statistics, you know that if you're doing a set data point based on a set range, the longer the data, the previous range is removed, right? Based on a chronological order. So again, for example, we're not going to base our data in 2020 or 2021. We are now compared to 2022 now. Now, if 2022 CPI was 8.9% in June, what are we at today? I think we're at, what, 6.3% on January? If we just got to 6.3 again, let's just say, in June, what does that do for the year over year number? That would probably bring it down about 1.5, maybe 1.25 percentage points based on a 1-year basis, because the highest point in June has rolled off since we're doing 52 weeks, 12 months, or a 1-year rolling period. So what I think the Fed is doing, and it's very subtle, is that they want to keep employment at maximum, yet see that inflation is rolling over. With that being said, I believe they will move the goalposts. 2% is their CPI target, right? That's what we know. I think they're going to move it to around 3, maybe 3.5, right around the summer in June and July, where we had the actual peak in CPI. How's this? In March, we had an 8.5 CPI, and that fell in April. But the 8.5 CPI, granted, a lot of that was built on the Ukraine and Russia war that's happening. Not all of it, but some of it. So again, 8.5% in March. When we're in April and we have a new CPI number, or a new CPI this month, let's say that, and it comes in at 6.3, 6%, let's say 6.5, just for the hell of it. That's 2 points off the current level. And we're already removing that 8.5 off that range. So what does that do to the year over year number? If the year over year number, which is the Fed is completely focused on, 2%, they never said month over month 2%, they said year over year 2%. So the month over month you can kind of throw out the window, because that change is based on many factors, maybe oil prices, commodity prices, whatever. But again, look at March. 8.5% on 8.5% gain CPI. Remember, that will roll over next month. Take away that 8.5. Once we get to June, take away that 8.93, and then we're going lower. If we did an inflation number based on just the rolling 3 months, CPI is at 1.8%. But you will not hear that from them, from CNBC. You will not hear that. You'd have to do your own research on that one. How about this? On a 6-month annualized basis, we're at 2.6% CPI. A lot different than 6.3. So right now, guys, you are in a waiting period. It is a game with these old people at the Fed. They are using lag data to provide analysis on things that have already happened. So they're late to the party. I always say day late and a dollar short. So we have March and June. Those are the big spikes in CPI. Once those two roll over, and let's just say we're 6% throughout the way, maybe 6.3% throughout the way. Law of average will show that that will be brought down and our year-over-year CPI will start testing possibly 4 or 4.5, depending on where we are. If inflation really starts coming down a little more by June, you better believe that the Fed is going to start doing their victory lap saying, we defeated inflation, when that's not exactly the case. I'm not saying inflation's not there. I'm saying that the numbers that they're looking at based on a year-over-year change will change based on the last year's numbers. If we're comparing just last year, which was what they are, keep that in mind. In the summer, midsummer, if inflation is just at this level, keep in mind the previous numbers will flow out, and that's where we will be moving forward. So again, I'm not taking too much emphasis on what the Fed is saying today, but we'll see where we're going. Okay, so we were saying that my mic is not working, but my mic is working. So can you say testing, testing, testing? Can anyone hear me? Sorry, I had a long little thing I was talking about with the Fed. Let's get around the horn here. Dow futures down 18 points, NASDAQ down 9, S&P flat this morning. Russell up 0.08%. Remember, the Russell was underperforming yesterday. 10-year Treasury yields, we gapped down slightly, 3.948. The dollar is, excuse me, 104.59. That is up 0.23%. And the VIX is at 1.34%. And again, crude oil is still kind of stuck in that range. Nothing to report, 79.94. And then we also have gasoline at 277. Gold 1838 currently. That's per ounce. That is down 0.86%. Seeing a ton of people writing. Good morning. Good morning. See, Mike is cutting out. Sorry, networking problems. Miss a lot of good information. My brain is doing its best. Sorry, Fabian. Hey, this will be repeated. Again, all I was saying. Let's go with the quick Reddit. Too long didn't read. My point is that the Fed is looking at data compared to last year when we had elevated inflation. Inflation is not as elevated as it was last year. I think everyone can agree to that. So last time we had elevated numbers compared to 1 year or another, a big number. Gasoline last year, tech, right? Those tech sales for Apple, Microsoft, and all those names in 2021, they front ran all their earnings. And then what happens? Rolled off the cliff, like Amazon. Because it's hard to compare 2020 and 2021 being banner years for these tech companies, and then 2022 being just a normal year. In my opinion, tech is having a great year in terms of their earnings. They're not doing horrible. But again, if you compare it to 2020 and 2021, when you had free money, everyone home, and everyone using your technology, I think you're going to do great. So again, it's all about kind of keeping the apples and apples situation where you want to compare the right data compared to the right environment. Again, if I told you run outside in a 100 meter sprint, and I said you have to wear a suit with a tie and everything and dress shoes, versus you wearing, running shorts, running shirt, and running sneakers, it's still the same thing. Your body's still running the 100-meter dash, but again, the environment's different. You're wearing a suit versus wearing running shoes. Right now, it's completely different, the environment. That's what the Fed, in my opinion, will come to understand just a little later, just not right now. I think 25 basis points is going to happen. I think Powell and the Fed's commitment to inflation is more a commitment to the jobs. And I think they want to keep everyone employed because, like we said before, bringing demand is more difficult than building supply. You can't force people to buy your stuff. You can't force people to consume. That doesn't exist. The only way we can force people to consume is if you give them money. And even that people save. We know the pandemic savings. That's too long, didn't read right. Silver futures 2076 down 1.77% an ounce. Copper down 1.63% at $4.22 an ounce. The euro dollar is down 29 pips, 106.53. Dollar yen 136.23 up 27 pips. Pound dollar 119.73 down 52 pips this morning. Bitcoin is basically flat, 22,360. Ethereum 1564. Okay, let's go over really quick some charts, and I want to go over yesterday's action. So right now in S&P 500, we did break above at 4082, right? We did get a little higher. we got above the 20, and then we settled below the 20. So again, you can see that inverted hammer. Yes, not good, obviously. When we have inverted hammers, what happens? We get a little bit of a drawdown. At least the last time that we have, you can see these kind of inverted hammers get a little more weakness. So again, with Powell coming today, another inverted hammer, kind of close. But when we had one here back in the 20th of October, not exactly the easiest or the most textbook inverted hammer, but again, some selling pressure, and then we continue to soar. So and then you also have an inverted hammer here on the 9th of January, and we soar the next 4 sessions. So again, I know you're probably looking at your daily chart saying, man, you know, this is a textbook, we're probably gonna get some more downside. Not exactly, because we've had inverted hammers on daily candles and we've continued to go higher. So let's not base it just completely on that. The 20-day moving average being key resistance right now, we're really at an inflection point on the S&P, and it's very interesting because you have the downward trend, we broke above the upward trend, we're back above it, and then you're right near the 20 DMA on the dollar as well. So again, which is going to break first? The DMA below Dixie, the 20 DMA on the dollar, or the 20 DMA on the S&P 500? So again, is it support for the dollar? Is it resistance for S&P? And that's where we are in terms of the market, at least right now. So we're going to see exactly what Chairman Powell says, and we'll go from there. Check from Fabian, C-H-E-C. I don't know if that's a stock, obviously. Chegg. So let's go ahead and take a look here. Check mic is, can anyone not hear me? Because I'm using the speaker from the computer. But I will go ahead and finish this up anyway, so maybe the mic is having an issue. Back to yesterday. We did trade NVIDIA yesterday. Look at this pop and drop yesterday, right over here. We got out right at 40%, and then we pulled back here at around 81.13. But all the stocks yesterday in the stock market fell. It wasn't just AMD. It wasn't just Netflix, which I have calls. It wasn't just Apple. Apple was up 3% at its peak, 3.1 or so, and then it pulled back to around 2% gain. So what I did notice is that volumes fell off a cliff right around 10 a.m. So again, seeing that pullback, again, we're getting ahead of Powell. We'll see what we get from there. Let's take a look at Netflix. I am still in this trade. It is down, ugly. I've been there before with NVIDIA just last week. So let's go and take a look at the chart. And you can see a nice channel here. But again, we're kind of holding the 100-day moving average currently. We're trading at 313, 308.14 being support. Those premiums got hit as volumes dried up rather quickly. So again, it got very ugly very much in a hurry. And I'm going to go ahead and show you here on S&P 500 futures on a 5-minute chart on how much, actually an hour chart, sorry, on how much they fell. Look at this. You had right here the peak right around 10 a.m. and then just 1, 2, 3, 4 hours of complete no volume. One of the lowest volumes of the week. Fell off a cliff, and then we actually had the end of day close candle, which usually gets a little more volume. But again, I base this more on ugly volume. And again, this is no different than what we had on Friday. Low volume, and then the stock moves become a little more pronounced. And you can see that we went up on Friday versus down on yesterday. And again, look at this, just pretty much flat. Nothing really happened. So I'm not too concerned about Netflix. I still have an upward gap that I'm keeping an eye on right around 332, 330 being the 200 MA support on the hourly. It's going to take a little bit of time, and it goes, of course, if it does break down, we'll go from there and see what happens. In terms of metaverse, let's take a look at Meta. Meta did report some layoffs they're doing, and you can see the stock is up because of that. I have an alert at 190 for a break, and if it does break, I'm looking at the 201 or 200 level. That's about a $10 move. Again, you do have NFP this week on Friday. Powell speaks today at 10 a.m. My apologies. I think someone asked me about that. 10 a.m. Oh, that was Zoom Balloon who asked. 10 a.m. is when Powell speaks. So again, we're going to get something broken, I assume. We're going to get some kind of volatility. I doubt we're just going to have low volume chop that we had yesterday in terms of the volume candles. But again, I'm really just going to see if we get above 40.80, possibly that 4100 resistance. We talked about that yesterday, possibly getting there by this week. If we get to 4100 and settle above 4100, then it gets interesting. But around 4100, I expect us to kind of chop around, maybe bounce back to the 20. Not a lot of edge there to go more upside. If anything, I may be looking to possibly look at some shorts short term. Again, very, very quickly as we get to 4100, that's a key resistance level. Yes, we broke out above that for a couple of weeks, but it seems to be that magnet in the sand, or magnet, excuse me, 4100 S&P. That's what I'll be looking for, resistance. And if we get there, we'll go ahead and see where we move on from there. If we have maybe an overbought RSI, or the VIX is really smashed down, or if the dollar starts testing some support, then we'll see what we do from there. But again, it's not as simple as just one chart on S&P. You have to look at the rest of the macro, the dollar, the yields, and everything else. So that's where we are today. Again, just waiting for the old man to speak. And once he does, we'll see what the market reacts. My apologies again, Fabian, if your mic is, if you cannot hear me, my apologies. This is recorded, of course, under the live tab on our YouTube channel. So again, all of these videos, I've been doing these videos for years. Go check out our videos from 2020, 2019. They're all fun. You can see how the change in the market has happened, and change in my face, of course. So always fun to look back at some of the videos and see how much things have changed since we've talked about them live, of course. We'll leave it there, guys. Have a great rest of your morning. I will catch you guys tomorrow for the morning note. Discord, I will catch you on the blog later on today. Have a great rest of your day. Cheers.